Renaissance Macro's Jeff deGraaf joins us now. He also watches the key technical areas of this market. Joins us now. Do you agree with that? Krinsky says, quote, this is your chance.
I think we're pretty close. We've done several of the things that we were hoping to see back from the fourth quarter. I mean, the one that I'll throw at you is beta was in the 99th percentile of performance historically, high beta versus low on the 6th of December. And we warned about that. And now we're at the first percentile. And I will tell you, when we warn about it, we're thinking we go from the 99th percentile to something that's below 50%. A lot of times you'll get down into the 10th percentile, but to go to the first is pretty extraordinary. So that performance differential, and it's all the names that you hit, right? Tesla and Palantir and the like, has really taken a lot out of that. And I think that's the good news. There are a few other things that we're watching for that, proprietarily we look to triangulate some type of low. Regrettably, we're not quite there yet, but I think we've done I'll call it 80% of the work, and we'll see if today's final figures give us some more of those touch points.
Is the VIX spike telling you anything? I mean, it's not an explosion like we saw with the unwind of the carry trade in the early part of last August, but it is a sharp move higher of late.
It is. The VIX in isolation doesn't work that well. I know people love it, but mathematically it's not that great. What we'll do actually is look at the difference between the expectations of volatility, because really what the VIX is nothing more than the equity market equivalent of credit. And so we'll measure those two things against each other. And the good news here is that equities are far outpricing the downside than what we're seeing from the credit market. So that's a condition that we look for. Right now, we're in about the 95th percentile of that historically, which is good news. But it's a good setup. But the VIX in isolation we don't use, but within the context of how we look at it with credit, it certainly is important and is supportive here.
Couple downgrades of U.S. equities today by various firms. You say your favorite markets right now are outside the U.S. In fact, Hong Kong and China. Tell me more.
We've been bullish on China and Hong Kong for at least 6 months now. It was pretty taxing there for a while, to be frank, but it never did anything that looked to us to be, troublesome from that standpoint. So, look, I think there's three things going for China and Hong Kong. The first is that the valuations, if you look at the quote-unquote Buffett indicator and apply that to Hong Kong and China, it's very, very favorable. Market caps are below 100% of GDP, which is good news. I think the sentiment there is great. It was, quote-unquote uninvestable for so long. And those for us aren't good enough. We need some technical affirmation around that. And we got that. Last year, we had the 50-day cross above the 200-day. We had escape velocity, which is this massive expansion in 20-day highs in those markets. So really bullish things taking place there. And we think that that's got a long runway to go, probably, the next 2 or 3 years at least.
Let me ask you about this so-called death cross that we saw recently in the SMH. I mean, the chip stocks just can't find any footing. That's another big problem, isn't it?
Yes and no. I mean, keep in mind that the semiconductors were so overblown in terms of sentiment. We made a call on those names back in late summer that they were deteriorating. We took a lot of heat for that, and it's proved to be right. I think you're seeing a lot of this sort of flow through from interest rates. You're seeing it in home builders. You're seeing it in those related types of names. Certainly, there's a cyclical component of semiconductors that we keep our eye on, and so it's uncomfortable. But I can't say that just because the semis are weaker, that's going to be bad for the market. I mean, one thing that's really been surprising, and I think it's very bullish globally, is financials have been one of the leadership groups for most of 2024, particularly the back half of 2024. The European financials look good. The Chinese financials look good. The Japanese financials look good. It's really, really hard for us to draw a link that this is going to be something that's more nefarious and deeper and longer when you have the support of the financials. And I know they're correcting, but when we look at relative performance, when we look at some of the other things that help us to discern where the leadership is, they're still very, very good. And importantly, they're good globally.